Good afternoon, everybody. Welcome to this session where we shall be discussing everything frontier markets, emerging markets, challenges, opportunities, investment opportunities, and the use of technology, and probably what comes as funding in technology in such markets. And we shall attempt to answer the question, who will be the next frontier markets? Let me start with some data before I introduce my panelists. If we talk about emerging markets economies, and we look at the economic data, let's start with PMI, Purchasing Manager Index. The average reading in August for emerging markets was at 52.7. We can compare it with a bit of a humble number coming from advanced economics, and we know that 50 below is retraction, 50 above is growth. At an equity return level, we are looking at about an average of 4.6% return in the first 8 months in 2023, underperforming 16% return in advanced markets. I mean, China here drive the poor performance because it does take about 28% of the average weight of the indices. At an economy level, also we're looking at some data that Bloomberg issued lately, and they're expecting emerging markets economies to expand by 4.1% this year, 4.4% next year, while the US is projected to do a very moderate growth this year of about 0.5% and about 1.2% next year. So there's a big gap between the two economic growth. Please join me to welcome our esteemed panelists. Dr. Talal Al-Jdebi, Shared Services Deputy CEO, TEQA. William Baubin, he's the co-founder and managing general partner of Orbit Startups. Henry Fernandez, the chairman and the CEO of MSCI. Alessandro Horta, the CEO of Vinci Partners. And last but not least, Robert Agostinelli, DMD and co-founder of RON. I'm going to start with you, Henry. MSCI Index is very, very famous. We use them, we track them, and we look at the different changes that happens in a termly basis. So how can you describe the history and also the evolution of emerging markets within your ACW universe?
So it's a pleasure to be here. Thank you for having me. Back in the 1980s, investors began to dabble in emerging markets. So at the time, MSCI had a series of indices in developed markets. So we thought it was time to establish a series of emerging markets. So in 1988, we created the Emerging Market Index with about 10 countries, and they represented about 1% of the market capitalization of the All Country World Index. So today, we have about 24 countries, from 10 to 24. Yeah. The market capitalization compared to the total index is about 11%. And it's about 3,300 securities in emerging markets. Clearly, a lot of them are from China. But importantly, when you look at the emerging market index, the 11% is based on what we call float-adjusted market capitalization. You take out the lack of float in the securities. But if you look at the full market capitalization, the emerging markets will be about 24% of the world. And if you look at it from a GDP, gross domestic product adjusted basis, the emerging markets will be about 39%. So there's been quite a run-up, clearly, in that period of time, and it's now a very core, index for us, probably one of the most famous ones, and very much in demand.
And you're expecting it to go further?
Yeah, so the emerging markets are a little bit of a roller coaster, as we know. It is always a little bit of El Dorado. They're going to do really well, and they don't. They're going to do really well. But if you look at a long-term horizon, the valuations are pretty right now. They're very low compared to the developed markets. What we call the demographic dividend is going to come because the developed market is shrinking in population. The emerging market is growing. We're hoping that the developing countries, the emerging markets, can have much higher economic growth over the next 10, 15 years. But it's very hard to beat technological innovation, biotech innovation in the West, particularly in America, internet innovation in China. So we thought, going back in time, that the emerging markets were actually going to grow faster when a lot of the stocks in the developed markets were mostly value stocks. But you now have an incredible amount of new industries developing in the developed market that will grow fast too, right?
Robert, you run, and it's a very, very big private equity firm. You've been operating for over 25 years, and you have about $13 billion under asset management. Where do you see most opportunities today? You're heavily exposed in the American markets or the developed markets. What is the future? Are you looking at frontier? Are you looking at emerging? Are you changing your strategy? Does technology take a space in your map?
You're right. We're not a technology investor per se, but technology matters greatly to us, particularly the connectivity that's going on in the world. And I would say the biggest frontier that we're looking at when we look at markets, because even though we're invested in Europe and the United States in the main, virtually all of our companies have exposure to that 39% Henry refers to. But in a simple math, if you look at the one innovation that could transform these markets, it's Starlink, which is going to create the connectivity throughout the world.
We see them flying everywhere at night.
They're all over the way, right?
Yes.
The UFOs. So basic math, there's 8 billion people in the world. 3 billion don't have the access, and literally overnight, it's going to happen. And the only other governor on that is countries that don't let it happen, and we can talk about that differently.
William, as a startup funder, someone who's heavily investing in startups in technology, phase one probably, and probably you have the most expertise when it comes to frontier markets and emerging markets. How do you see valuation in the current environment?
Yeah, so I think the key is growth. So you have valuation and growth. You're seeing a lot faster growth in emerging frontier. We think it's the biggest opportunity there. So by 2030, emerging frontier will be the majority of GDP in the world, because you're seeing 5, 6, 7% growth rates, whereas the developed markets are around 2%. So if you look at when I started investing in China in 2002, 2003, 2004, the tech market, total market cap was $3 billion. When I stopped investing in 2018, it was over $3 trillion. We think that we're looking at the same type of opportunity in emerging frontier markets around the world. That's where we're investing as an early stage VC. How do you take that learning from China? Then it hit India. Now we're in the rest of South Asia, Middle East, where we're the #3 most active VC, North Africa, Sub-Saharan Africa, and LATAM. So the valuations are actually pretty good when you take into account two things, the growth and also kind of the bubble valuations that you saw out of more developed markets like US. So looking at 100 to 250 times monthly net revenue / gross profit for companies that are growing 10, 15% month on month and that are break even, we think is quite reasonable.
Talal, let's go a bit micro. You're a tech expert. You've been in the investment scene here quite for long, and now you're providing these technology services to different entities, government, private entities. So can you just put us in a loop on how do you determine consumer demand? How is it sustainable if we look at these fluctuations and challenges we're facing today?
Of course, and just what William said, when we look at growth, which is the key potential that we're looking after when we explore markets, looking for opportunities from frontiers economies, one need to have some untraditional approaches in measuring that growth and measuring the potential and exploring those opportunities. And among those untraditional approaches, you need to get to one level of granularity to understand specific applications. For example, when we talk about e-commerce, now e-commerce would show some specific activities at specific markets, specific countries. But from an investor perspective, one needs to look and understand how those applications of e-commerce are actually interacting with different neighboring countries. What is the role, for example, of big players with the competition at the local level? Is it killing the local competition, or the local competition is basically benefiting from that global intervention happening from the big players in that specific market? Such interactions, looking at a specific application, would give great insights for the investors who's looking after the great opportunities in the frontier economies. Considering classical economy metrics that economists normally use wouldn't be sufficient in our opinion.
Alessandro, you're from Brazil, and you invest in there. Brazil has been losing a bit of momentum, if we say so, lately. Do you think it can revert back? Do you see opportunities there?
Yes, I do. In fact, as Harry said before, looking specifically is not different from the rest of the markets. Brazil is in a very low multiple point in terms of valuation now. We are talking about 9 times price earnings for the overall stock market in Brazil. And if you compare relatively to the fundamentals there, of course, there is the global situation, we are not in the worst moment. And I do believe that we recover space, and I see a lot of opportunities because I see 3 main drivers for that. The first 2 is really the core drivers, and the other one, I would say it's a consequence of the first 2. First, all this climate issue, Brazil today is key, globally speaking, for the energy transition. It's climate is a global issue. It's impossible to talk about climate without Brazil. Brazil is the low-cost producer of renewables, of any green type of energy. The second is food security. Brazil, again, it's impossible to talk about food security without talking about agro-business in Brazil and their consequence. And the third one, that's basically a consequence of the first 2, is infrastructure. Because to really deploy both clean energy in Brazil and agribusiness and as a whole, you need heavy investments in infrastructure. With that, I do believe that that will bring back an interesting growth perspective going forward in Brazil.
And what is it that is stopping investors of getting attracted to the Brazilian market today?
I would say it's because of that main issues that I talked before, and because all of them, it's a global size opportunity. Because sometimes when you look for companies, normally you see smaller tickets for emerging markets or frontier markets. But on these specific teams, investment teams, I see global size opportunities. So it's really, you can deploy any amount of money that you want, and it's a global solution for problems that all of us will face, no matter in which market you are. You need to face climate, so green energy, and you need to take care of the food security.
Henry, 2023 was not an easy year. It was a difficult year to manage. And my question to you, if you can give us an outlook for next year, 2024, in terms of risks and opportunities in emerging and frontier markets.
So we are obviously very bullish in this region of the world.
When you say this region,
This
you mean
region,
Middle East?
meaning basically Saudi Arabia, Qatar, Emirates. It's the demand for oil will continue. This economy in Saudi Arabia will be diversified, and they will generate a lot of demand because of that. similar to Abu Dhabi. And then the demand for gas in Qatar is going to go on for significantly more years, the demand for oil. So we see this place, in our definition, the Gulf is an emerging market area. So we see a lot of growth here. We see a lot of challenges in emerging markets for political and geopolitical reasons. We see a lot of the challenges in those countries that don't have energy, don't have food. You know, Egypt, for example, would be in that category. You know, political issues like in Turkey, right? Obviously, Southeast Asia, because China is a magnet there. If China slows down, Southeast Asia is not going to grow as much. But I think on a longer-term basis, as I said before, the demographics are on its side. As William was saying, you know, the economic growth is going to dictate the growth of earnings and the multiples. And over a longer period of time, I think that some emerging markets are going to do well. Emerging market is also a catch-all category. We got to recognize that. So you got to be discerning as to which area you're speaking to, right?
I have one question for Talal and also William. It's regarding the disruptive technologies and how is this accelerating growth and also a leapfrog in any infrastructure limitation. What signs are you watching? What signs are you looking at when we talk about technology adoption in choosing the next frontier markets?
Yeah.
Talal.
Yeah, so the first one, very simple, internet access. Second one is a smartphone that's cheap enough for somebody to buy it, whether it's a new one or actually we have a bunch of companies that do secondhand smartphones. And then the third thing is just the ability to pay for things. It doesn't need to be digital payment, it just needs to be payment. Those three things, we saw China take off. And if you look at a market like Pakistan, we started investing in Pakistan at the end of 2019, so like 3.5 years ago. We have 19 investments there. So you had a massive flood. You had COVID, you had 2 devaluations, you have political unrest, you have inflation, and we have not lost one portfolio company. They're all either break even, profitable, growing pretty nicely. And you cannot really stop technology making markets more efficient. So across 4 companies, they've digitized all these micro SME mom and pop shops and connected them with the farmers, wiping out all the middle people. So digitized over 2 million businesses over the last 3 years. And that's restructuring the economy where these farmers are making more money. The local gangsters that control the seeds and the fertilizer and the marketplaces are out increasingly. And then those mom and pop shops are making 20% more in their pocket every month. But at the same time, the prices that people are paying for food is also down 15 to 20%. So if you take that in combination, we're looking at the same sort of revolution that we saw in China and to some extent India happening in emerging frontier markets. So for this sort of digitization, we have 27 portfolio companies from LATAM to Middle East now, North Africa, Sub-Saharan Africa, South Asia, taking that China playbook and then bringing it around the world. And we don't see macro effects or even political effects having any impact on it. It's very difficult to stop once you have those three ingredients.
I guess China was a good learning curve experience.
Yeah,
Probably
you want
some things wouldn't be repeated in other regions.
Yeah, to solve an emerging frontier market challenge, you need to have an emerging frontier market solution.
Talal?
Yeah, actually, I had some of what I wanted to say in his answer. I'm kidding, but basically, right on spot. Mobile adoption, payments technologies, and digital literacy in general, and digital government as well. And I want to shed light on the latest point that I mentioned, which is the way that digital government can work. And this is something that we have experience with. And this would change the perspective of the investor. And I will tell you why, how. Now, when government basically introduce digitization and automation to help the infrastructure, which is something really great because it saves time and it's considered an unclassical approach in basically implementing the reforms that governments want to implement, and this is a very strong point that investors need to look at. We can basically spot some specific characteristics of that approach in implementing digital government applications. And what we refer basically to is regulatory technology, or RegTech. And here I'm not referring to the limited scope of RegTech, which is very banks and financial institutions are very familiar with, which is almost a one-way direction, KYC processor, etc. Here we're referring to the applications of RegTech in trade systems, for example, in export and import technologies, implementation of RegTech and litigation systems, and how that litigation system in a country would work with the trade system in order to protect the rights of the investor. The observations of those elements and the approach of a specific market or country implementing that would shed the great light on the potential of that frontier economy to create the required, I would say, risk profile for the investor, and thus make realization of the opportunity.
Robert, as an investor, you did mention Starlink, and Starlink now is operating in many emerging and frontier markets. But the question here is, what would make you decide against investing in a frontier or new emerging or emerging markets?
Well, there's one overriding consideration which we look at in everything we do, and I think investors, interested in what others think, but investors should be focused on, and today is very relevant, and that's simply put the rule of law. We don't invest in any country where there's no rule of law. China has no rule of law, Exhibit A. Russia has no rule of law. Cuba, Venezuela, you can go through the list. And it's a deterrent for us. And
is Brazil on the list?
Sorry?
Brazil is on the list?
No, Brazil's got corruption, but they have a rule of law.
So
and we do invest in Brazil.
And this comes to me, to you, Alessandro. Where are the real opportunities when it comes to, you see, they just made me lose concentration. Where do you see opportunities in Brazil? Infrastructure, agri, you mentioned it briefly in your previous answer, but where, I mean, if these are investors and interested to enter Brazil, what would you tell them in a very transparent manner? I mean, apart from the corruption bit.
Yes, I think, as I said, the main two points is infrastructure, especially related to energy. One point that I would like to mention here in Saudi is that today Brazil, recently, the main, I would say, economic indicator that's going very well in Brazil is the trade balance. And the main product now in the trade balance Brazil, believe it or not, is oil. We are producing like 3.5 million barrels a day, and we are going to, it's already predicted because it's already contracted to 5 million. But of course, I would say that today the main opportunity would be in renewables, green energy, and you can choose from solar to hydro to wind farms to hydrogen. All of them will be worldwide competitive in Brazil right now. And on the other side, agribusiness is really very competitive, or buying land or infrastructure related to the export of grains or even animal protein like cattle, poultry, or pig. So I would say the main opportunity, and it's a sizable opportunity, really billions and billions can be deployed, would be in the energy transition assets like green energy, and again in the agribusiness sector. And just to this comment, I agree completely with him. I think we have the rule of law. Eventually you put the corrupt in jail, but there is the main problem, and Brazil is included. I would say we are a little bit better in that sense, but in frontier markets as a role, I like to say is a governance problem. And this, it's really a governance issue in terms of political establishment, combining of the laws and etc. And you can rank. It's difficult to put all the frontier markets in the same basket. Each of them, they have particularities, and there is the big no-nos, countries that really, and I agree, it's difficult to invest.
Tala, let's continue in the same theme and probably discuss this from a corporate governance point of view. corruption is still an imminent issue. And my question to you, what financial supervision can be done to actually lower this at least and make it more efficient and make it more attractive to enter frontier markets?
Yes, of course. And this is a very important matter for investors. And because we're discussing who will be the next frontier market, so we shouldn't be talking about investment choices that are secure today and that are basically free of those type of risks that we would expect. But the question is about selecting the point where we basically create a yield in the coming future with an acceptable return. And thus, we need to understand the speed by which those countries basically fight matters like corruption. And here we are back again to the regulatory technology and the approach of implementing that. Watching for those specific elements will create different understanding of those who is basically ranked first and who is ranked next in that race toward being eligible for the investment opportunities. And I want honestly to emphasize two elements that we have basically practiced and we have witnessed in the region and in Saudi Arabia specifically when we talk about the role and the effectiveness of RegTech applications in the marketplace and how that would add help to investors. And I believe this would showcase a very good examples for other countries and markets as well. When we talk about regulatory technologies, as I mentioned, this is not limited to the confined definition of a banking RegTech application. It is basically a country-wide, more broader than financial aspects, and it tackles different applications within that country. The first condition to have an effective regulatory technology application is to have a public and a private partnership on that. And that is that regulatory technology solution is not basically a one-way enforcement
That's what
of
we
law.
do.
Yeah, this is what's happening today. It's a multi-party engagement where basically the private sector in general take an active role in implementing the regulation and enhancing the practice. What would create a direct result on the matters that are important to the investors like transparency and anti-corruption activities and etc. And the partnership is not basically a simple formula. It is something related to the design of the solution, to the innovation in the business model and the integration with the disruptive technologies that can go with that regulatory enforcement. And when we talk about personal identification and matters that links, for example, the trade system to the litigation system, as I mentioned before, that all puts a very good example in implementing regulatory solutions. And we have, of course, the showcases all across the region and the country proving this point. And the other element is basically the integration of that RIC solution with the other underlying systems of development in the country. And this is something maybe difficult to say and difficult to explain, but today is easier done in the virtual environment, in the cloud-based systems. We have seen countries that are linking, for example, financial technology inclusion and digital literacy through mobile users with regulatory enforcement. We have seen different cases of getting to the utilizing the technology channel that is available to the normal consumer to implement indirectly an enhanced level of governance for the country and for the other participants in the marketplace. And investor watching for those type of elements would, of course, have a very changed view on who would be the next frontier market.
William, looking ahead, what frontier markets is making you the most excited about? Where do you see the next opportunity coming from?
Yeah, I think we're generally focused on bigger markets, so large populations. So we're super excited about Pakistan, I mentioned, but also Bangladesh. We have 55 portfolio companies in India. We put our bets down there. We just entered Latin America about 2 years ago, and we're very excited about Latin America. I think the key thing for internet and software, it's very different than infrastructure, right? So if you're growing up in one market, that one market is not big enough to build a sizable company unless you're in, say, a China or maybe in India, US. So for the rest of the emerging frontier markets, the real key is to have presence in multiple countries, which is why we're focused on helping our companies go cross-border. Once you go from one market to two markets, your actually valuation goes up because you've diversified a bit, you reduce the risk. When you go to three markets, then it goes up again. So the key for emerging frontier markets is to be in multiple markets for each company. And for us, we're present in all the emerging frontier markets in the world.
Henry, COP28 is soon coming. The United Arab Emirates is very excited to host it. And what happens in this gathering is that we have both sides of the globe. We have the developing, emerging, frontier economies, and then we have the advanced ones. And we are talking about different achievements when we come to these. Advanced are pushing for low carbon, the transition, but the poorer side are still struggling to either achieve a good, healthy growth. How can they help each other? I mean, how can advanced economies meet the other side of the spectrum and help them achieve probably the same targets?
So first of all, I come from the global south. So I hopefully gives me a little bit of credibility to speak very directly. There are a lot of issues that were addressed at Sharm el-Sheikh and are going to be addressed again in Dubai and in the next COP and the next COP. And that is, the global south rightly claims that climate change has been produced by the industrialization of the north. And that is true. But the world is not fair. And nobody ever said that the world is fair. So the global south says, now you got to pay for that and give us all the money to decarbonize. That is not going to happen. The global north is going to give the south some money in order to deal with certain problems, especially the poorest countries. But at the end, the northern countries, developed markets, are going to tell the south, look, we have our own problems too to solve. Our governments are not very rich. We have declining populations, therefore less taxing power and all of that, so you got to solve your own problems. So I think the first realization has to be that in the south, we all have to tackle the problem ourselves, not wait for charity from the north or blame the north for what they cost. The second issue is that not every problem in the world has to be a government answer. So, every time there is a problem in this situation, we look for daddy to give us the salvation. And therefore, we look for the governments, we look for the World Bank, we look for the IMF, we look for all the multilateral agencies. And the last entity that we look to is the private sector, because we're looking for charity, right? That's not going to happen. So what we need are private sector solutions to a lot of these problems with acceptable rates of return for the risks that are being taken. There will be some concessionary finance, there will be some low interest rate loans and the like, but we need, in the South, in the emerging markets, currently there is $150 billion a year that is being spent on climate change, right? We need $1 trillion a year by 2030. 7 times what is being spent today. That is not going to come from governments.
And it's not going to come from
the private sector.
either.
And the two big, we can talk about this for a long time, but the two big issues, the two big opportunities are carbon credits. The North needs a lot of carbon credits. A lot of that is nature-based in Brazil and Indonesia and in other places like that. So we need better systems to transfer those prices, or have prices to transfer those assets. And the second thing is there is a lot of high carbon energy that will need to be put to bed, put to rest in the South, that can be invested by the North at very high and productive rates.
Okay. We have about 1 minute and 30 seconds. We navigated through the session and everything frontier, emerging. Let's attempt to answer the question, the title of this session. And I'll start with you, Robert. Who will be the next frontier markets?
The next frontier market, in my mind, will be right here. This is the frontier. Saudi Arabia is going to dwarf, by definition, by number, by all elements, every other market out there.
Alessandro, do you agree?
Yeah, I agree that Saudi will be one of them. I agree too that Latin America will be another one, and South Asia too. So it's difficult. The rest, I think, will not get to the same level.
Henry?
Yeah, so the Gulf, Vietnam, it's emerging. You know, it's going to take a while, but it's emerging. I think that, you know, Brazil, there's a lot of issues there, but it's a huge economy with a lot of prospects. So those would be two, three. Obviously, India. You know, there's a lot happening in India as well. Right?
William?
So we're global. Now, most fund managers are not global. The LPs hate it. But technology for us is global. So we're investing across all the emerging frontier markets, bringing the same solution to all of them.
So who will be your
Basically-
next pick?
Well, we're everywhere. So, you know, the big markets, the smaller ones a little tougher. But even small, we just did 3 deals in Colombia, small market, but they can then go cross-border across the region. So there's no market too small, especially if you're in tech and software.
Talal, should I ask you this question or just skip?
No, I will answer that. Honestly, my answer would be a little different because I wouldn't say, of course, Saudi Arabia.
Yeah, tell us.
Because that is already happening, for granted.
They mentioned.
Alhamdulillah. But I would say that watch out for the RegTech applications in those specific countries, in addition to the demographics and volume game, the economy indicators, but watch out to what extent they have an integrated RegTech. And any country is doing that, and we have good examples that we have seen in different places. Rwanda, for example. Maybe they don't have the volume, but they do have that edge, and they have made some great results. And other African countries, East Asia, will have good examples on that, and that's where the opportunity is.
Talal, William, Henry, Alessandro, Roberts, thank you very much. Thank you for attending our session. Hope we were not boring, and thank you very much.